You have questions, we have answers. This is Jane Muller.
And this is Ken Muller. Welcome to our show, all about real estate with Ken and Jane. And also, Happy New Year. We hope everybody had a happy holidays and is off to a very happy and safe new year, 2026.
Yes. Yeah. So New Year, we always want to talk about, summary of last year and look ahead of the new year. But because this year the holiday fell in the time, so I don't think all the data is in yet. So Ken, you must be very uncomfortable at the moment because no data.
We're just going to do it. We don't need the notes. We don't need anything.
Yeah, right.
We're going to freelance it, freestyle it, right? We can talk. You can talk about it. You can talk about ice freezing in Alaska for a half hour. So it doesn't really faze me at all. But we're going to talk in general. I think about the market and the overall feel from it. We know kind of.
I think
for 2025, we're going to talk about how the market was for the year and where the ship is going for 2026. And
I think by next week we should able to back up with more data because that's important. And joke is joke, but it's very important to look back, what happened the whole year. And that's going to make us understand better going forward, right? But just generally speaking, I think 2025 is a very interesting year. Inventory is still tight because we've been talking a lot about why inventory is tight. I think number one thing is a lot of people refinanced at that time with a 2.5%. And then later on, the interest rate went up to 7% and then dropped to 6. High 6, mid 6, low 6. And, hopefully this year, the interest rate will go, mid 5 or high 5 kind of thing. I think a lot of time, Ken, is the kind of when the people hear 5 or mid 5, psychologically.
That sounds really good now. It's all relative. Like psychologically, when we went from the COVID era up to 5, it didn't sound that good. But when you're going back downhill going downstream from a 7.5, 8, all the way back down to 5.5, 5, it sounds pretty good. It's all relative to what you're acclimated to. And now the market, now that we've drawn away from, now the market, the public is already acclimated to the higher interest rates. So when you go lower, it's always a good thing. But you're right. I think the inventory could increase because more sellers will be inclined to put their house on the market because it's a little bit more attractive if they're giving up, like we said on past shows, if they're locked into a 2.5%, 3.5% interest rate, it's not that big a jump to go to reach if they don't have their full equity in their house and they have to take out another loan from wherever they're moving to. It's not that big a jump to go from that current loan to a 5.5% loan, whereas at 7%, a lot of sellers were more inclined to stay put.
It's a huge difference.
So that's why that explained, that was probably the primary driving reason why the inventory stayed so low, because even the people that might have wanted to move to maybe a warmer state or out of state for whatever reason, they just decided, we're going to stay put because I can't go from a 2.5%, 3% loan
to a
7%. It doesn't it's just too much of a financial burden.
To give up, yes, absolutely. And also, I think another reason for this year, the inventory may come up higher is the, lot of companies during the COVID, they can work, from home. Maybe later on come back 1 day, 2 day. I think this year you will see a lot of more company may want their employee to go back to office. So that will, that definitely will make a lot of people have to
Well, that'll be good for my commercial office clients that can help us with the lease process. Sometimes the offices have been challenging and, they've gotten leased, but it's taken longer because understandably due to the market conditions, remote working and downsizing. But there is a draw. So there's a give and take. So everything is cyclical. Now you're going back. You're seeing a lot of companies that have mandated the employees go back to work for at least a few days a week. If not full-time.
Full-time now.
And they've gotten some resistance. And then there's other, I was talking to somebody in the chamber, and she was saying her husband, he's working remotely, and he can do everything remotely, but nonetheless, he's got to fly to San Diego, where the headquarters is, because the company wants to see him there physically. And every time he goes there, when he's done with the trip, he says, gee, I could have done everything remotely, but nonetheless, there's still that, like we were saying on when we had Andrew on, is that it used to be with the brokerage-owned businesses like real estate. there was something about having 20 agents in the office, the collaboration, the brainstorming, the sharing, the knowledge sharing. It's the energy, the juice.
I think, Ken, the technology is great. You can do everything at home by yourself. But I think you miss a big chunk of the pie, which you just said, the energy, the juice. I remember I read a book about Apple. They build the office. Typically, the people have to see each other and talk, right? That's how they structure the office building, because they encourage collaboration. You have to talk to each other. Sometimes the solution is just sparkled by the discussion.
That's what makes a good corporation, a good team, a good brokerage.
Yes.
It's the integration. It's you're working as a unit, you're a team, you're working togetherness, and then integrating ideas, solutions, mindset. So if you're all distant, there's you can still be effective, but and it is more efficient in some ways, but you're missing some of that energy that comes from being together.
Absolutely.
So but that's a good thing. A good sign if the office market is coming back.
But I think it's not going to go back the way you wanted used to be, because truly the AI took a lot of kind of the jobs too. So even though we'll go back to the office, the AI doesn't need a desk.
Right, that's true.
Unfortunately,
just need a computer platform.
I think unfortunately the commercial market, I still believe the office is still in a declining state.
Yeah, except for Class A. I think Class A office, there's a demand for that. That's
sure.
Be more
doctor office.
No, Class A, the types of the buildings.
Medical, absolutely.
That's in demand. And there's certain things that, that AI can't replace, like people that want to go out to eat. The AI can't eat the meal for you, and they can digest it.
Ken, can you imagine one day, right, if they develop a program
that can,
and you wear glasses or something, you can taste the food, you can enjoy the whole experience,
and then you get full from it too.
But you don't put an ounce of weight. That would be a thing I would be interested.
Oh, that would be a thing that would change the whole industry. It would sort of put a lot of people out of jobs in the whole food industry. They'd be like us. Yeah, that would be something.
Not a whole half of them.
I don't think we have to worry about that in the foreseeable many years and many lifetimes to come. For that happens.
You know what? Let's come back to real estate. What do we know the best?
Right.
So, moving forward to the new year, I think it's always good to look at what happening last year, 2025. In my own opinion, once again, this is only.
Well, let me ask you one question. Yeah. If going back to the end of 2024, last year, did 2025? Did the real estate market industry for 2025 go as you kind of foresaw it going at the beginning of the year, or you saw it? So explain to me what you initially thought a year ago, sitting in this chair when we had our show talking about the predictions for 2025. What did you predict, and how did it deviate from what you initially saw?
Deviate a lot, because in 2020, the end of 2024, kind of the last few months, especially the summertime, I feel the market already reached its peak, and the market slightly going down, and I don't think they'll collapse or anything, because in contrary to the last time, 2010, 11, 12, right? That was truly caused by the prime mortgage.
Subprime mortgage.
Subprime mortgage. That's because driven by the greed. You lend the people money, the people shouldn't even get a loan in the first place. But this time, it's very contrary. This time, the buyer, whoever got the mortgage during this time, even though the price went up 35 to maybe 55, 60%, but the solid financials, the buyers. Mm-hmm. So I don't see much default. I truly don't see much default with the loan. So in that part, that's a good news. That's
but it's
stable.
A good news because the lenders have their process, and
they did their job.
And industry made regulatory changes post the subprime collapse of the market to screen them better and to really heighten the whole process.
They want everything before they approve the loan, which is a good thing. It can be annoying at that time when you apply the loan, but they did the right thing, So for the health of the industry. But having said that, Ken, just answer your question, 2024, I thought, the market from 2020 to 2024 is keeping going up and up 4 years straight. So I truly didn't believe we'll go further up. In contrary, I thought we reached the peak 2024, the spring market or the winter/spring market. So because from June, the market is really slow. June, July, August was extremely slow. Even September came back a little, but it wasn't much. So I thought, by last year, I thought, maybe we
you
already
thought 2025
reached,
was headed maybe in the downhill.
Not downhill, but not. I don't perceive this keep going up.
Right.
Because there's no reason, no reasonable explanation for it. Right. But oh boy, I was wrong.
Yeah.
So in 2025 January, the market continued went up. So was fueled by the lack of inventory, and there's still demand there. So they still keeping going up. Last year, 2024, I remember in August, September, there was talk about interest rate going to go down. So we had a good few weeks, right? This hype. So the rate went down, but then the Fed didn't reduce the rate, and then the rate went up again. So after that, the market was like silent. It's like very quiet. So I thought, oh boy, what we're going to do now. So, for the January 2025, I prepared a lot of my sellers, okay? And, but nicely to my surprise, the market was keeping going up. Because the thing is, a lot of sellers may not understand, may not agree or worried missed out the market is. If you put a house at a number, but market think the house worth more, you always get a bidding war.
Yeah.
Right? But not all seller understood that or accept that. They think, well, if I keeping us more, I would get it.
So that's a strategic thing that the list agent has to advise them, because you may get more in the long run by bidding by undervaluing the house and allowing
it's
the
not
bidding,
underpricing,
not the value, maybe under listing the house at a very competitive price and letting the market bid it up as opposed to overlisting the price.
I never deliberately list the price down. Hoping to get a bidding war. I'm the person that's like more traditional. I will tell the client what I think is worth. And you put it on. Sometimes I could be wrong. The market could just be soft for 2 months for no reason. Or the market is just like January 2025, the market actually is keeping going up. So that's a nice surprise for me. Your house will get sold 10, 20, 30, 40, 50,000 over. It's not because I try to make it lower so the people can beat it up.
The market itself corrected itself.
The market itself corrected my understanding of the market, because I thought the market is going to be, already reached the peak. It's going to stay or slightly lower, but I was wrong in 2025.
Well, all right. Well, guess what? We have to take a break. We've covered January of 2025, so you've got a lot. We've got to talk a lot faster because we've got to get the remaining half of the show. We've got to get through the rest of 2025 and then give the look-see ahead for 2026. We'll be right back after these messages. Stay with us. Okay, welcome back to our show. So, Jane, we're talking about the market in 2025 before we do the look ahead to 2026. So, January was a pleasant surprise for the sellers. The market was higher than expected. How did the rest of the year?
I think the first 6 months was pretty good, but after that, the market started slow again. Kind of repeat last year pattern.
Yeah, you mean the summertime it started. There was a lull in the.
Yeah, kind of repeat some 2024. But this year, the good news is the rate did went down, so that did help the market. So I did see.
Right, because the Fed, I think, had three corrections.
Yeah, a lot of time the Fed correction may not directly influence on the rate.
The reason being because the lending industry already has that anticipated into their
and then they to do with the debt rather than the Fed rate, in a way. But I feel this year, I don't see the market going down that much, but I do feel as a listing agent, we have to help our seller to understand the market. Because if you look at the data, right, you looked at if we have, say, 20 new listings per week, right, in any township, so in the county probably more, just for example, right, and then you see maybe 2-3 relisted and you see plenty price reduction. What's telling you?
That's
telling you the market is like going to pretty much this slow down direction. Because when you see massive price reduction, that's a good indication. It's not every indication because maybe
you don't know the fact specifics of the house.
Exactly.
It could be that the house was
over,
overpriced initially, and
Yep.
it's not that. If you see the whole price reduction across a broad range of homes in different towns, and you know that that's an industry related. But if it's just here and there, then it could be that the house was overpriced by the list agent.
Yeah. So for me, right, Ken, I mean, especially when I see price reduction, a huge price reduction for the house, I normally schedule appointments, just preview it. So that's what helped me to understand the market, especially for the agent out there or the seller you thinking of put on the market, do the market research.
Right. Here's the thing. I think that, like you said, the price reduction, the pricing may stabilize, meaning that the house may still be selling for whatever the price that it was in 2025. However, there'll be more competition because of, like we're saying, because of the interest rates going down, more sellers that were holding off on relocating because they couldn't afford to assume a higher mortgage rate in their new residence because they were locked into the 2.5-3% are now going to consider listing their home. But there's more inventory, and more inventory means more competition, which means the buyers will be more selective, and so the price point, the listing price point that you have to be
vital
very
vital.
Critical that it's done professionally with the professional agent's input in.
Absolutely. I totally agree with you, Ken. And when you're in upswing market, if you list the house higher, it's okay because market is still going up, right? If you don't sell for a month and 2 months, 3 months, and when the market is up there, you will sell. But now it's just opposite. So there'll be more home on the market, I think, in 2026. From the supply of a home, you have a more supply. From the demand point of view, I think maybe the buyer side is a little bit weaker. First of all, I think the lot of AI replaced a lot of professional entry-level jobs, right? A lot of young people now, they, couldn't find a job, so they stay with their parents. And a lot of other offices because,
But it's also the affordability, too. I would think the rental market is so strong because the way the prices have gone up in central Jersey, in towns like East Brunswick, the price to get a home, it used to be the average home, you could get something for $500,000.
No, $300-400 you get reasonable.
But now the market is so up.
Ken, I remember, right, when I started 16 years ago in East Brunswick for $400, you have a very reasonable home.
Yeah,
400.
And maybe 16 years ago, like 750, 800 was like you could get a
luxury
mansion
home.
For that.
Now the same house worth 400 today would be about 650.
Easily.
So that's why I remember that time the luxury home. If you sell 700, it's a luxury home. Now it's a 1.2.
Yeah.
So that's really a high,
part of that's
affordability.
The appreciation, but affordability is an issue, though. Is a big issue in Central Jersey, right?
I think
kids, that's why, like you said, a lot of the younger market they have to either save or live with their parents, save it. But you are seeing some young kids that are still putting in the bids. There's still opportunity out there.
Depends, right? I mean, a lot of if the young. I mean, I had a young couple, very young couple. They bought a big house. But, because they're young, I guess they bought the stock, the Tesla, right time. And then they bought Bitcoin. That time, nobody would have even understood. I didn't even understood what it was. And they bought it.
They sold
them. So, and then they bought a house, almost cash.
Wow.
So that's a lot of time they may not, younger generation, they may not make the save up the money just by the salary. They could have other venues too,
Sure.
But I think this year, 2025, is hard. It's only January. It's the first show of the year. So it's hard to say what's going to be. But I feel there's going to be a lot of more inventory come to the market, and the buyer will have a more kind of going back to 2019 almost, right? Before the COVID, it's like I would call it a regular normal real estate landscape rather than the last 5 years.
So the listing expectation for days on the market is going to be longer than it typically was, which is not to say more normal, not necessarily.
Yes, it's not bad. It's normal.
Bad. It'll be normal.
Yeah.
That used to be the cycle 10 years ago. It wasn't
not even
normal
5 years ago
to have a house on the market for 30 to 45 days.
No, used to be. It's like if you sold a house for 2-3 months, that's normal.
Yeah.
I mean, that's why before 2020, the listing agreement normally is a 6 months.
Months, right.
Minimum. I mean,
because that's based on the industry gauging
standard.
That's what the time that's realistically needed for in fairness to the list agent.
Yeah, it's about 6 months is the standard. Recent years, I mean, this very rare. I had a listing for 6 months.
Right.
It's pretty much
they're ready
over 1 weekend or 2-3
weeks. The second time around by then.
Exactly.
That's
so
that usually more like 2 weeks or 3 weeks.
Yeah, 2 weeks, 3 weeks, even over the weekend. So that's going to be changed. So once again, Ken, I believe it's all about expectation. Okay,
right. You have to,
it's all about expectation versus agreement.
Yeah.
So a lot of time the seller feel, oh, you sold my friend's house only 1 weekend. I always tell them that's different market, right? It's truly it could take longer.
Mm-hmm.
And and another thing is, if I sold your friend's house down the street for X, it's not going to plus, 50,000 to your house. You're lucky you get the same amount.
Right.
So now the market
and it may take a longer. It'll take a longer period of time to do. Yeah.
Yeah.
So there's a lot.
So buyer has a lot of more to choose from. And as you know, during the COVID time, the buyer gave up a lot of their rights.
Right.
And the seller now is like kind of say, why don't they waive the appraisal? Why don't they agree as it is? So kind of
because the market, because it's all a matter of competition.
That was their right, Ken, in the beginning.
And it always is their right. And now it became the norm for them to waive it. When the seller would get the offers, they'd say, well, which one? Are they waiving this? Are they limiting the home inspection to structural, mechanical, and major defects? So that was like the expectation. But now it's going back to what it traditionally was, where the buyers say, no, I'm not going to waive the appraisal because I want to make, if it needs to appraise based on what I'm paying for it.
Yeah, absolutely. I think a lot of time, and it's all about educate our client and try to be honest. First of all, we have to understand. Okay, once we understand, we have to be honest with our client and not just rush them to sign the listing agreement. You have to really set up the right expectation. So the asking price is very important. Yeah. If you ask the right amount, say, for example, like last year, I thought market going down, but it didn't. So at least the price I think it should be. And if the market is still going up or didn't going down, you will have multiple offer. Mm-hmm. And the market correct itself.
Yeah.
So, I mean, you will see. But if you ask high, I mean, including my listing, some listing doesn't sell. I said, owner, if the house, we had so strong marketing, and if I had 5 listings this month and 4 sold, only 1 didn't. Mm-hmm. So that's the only thing I would think that the buyer's not ready to accept
that
our price.
Right.
Yeah, I mean, so I'm not a hurry to sell. That's a common thing.
And another thing
but
and another adjustment that sellers will probably have to get more acclimated to is that they will get, I think in the 2025 in the post-COVID market, the expectations of sellers was to get, when they had listed the home for $650, was that the offer would come in at $650 or higher, or some even were disappointed if it didn't come in above the offer price.
Yeah.
So now, but I think now with more competition, more inventory, more things for the buyer to choose from, they're going to be more selective, not only in what they bid on, but also the price. There'll be an adjustment. They may not all necessarily come in at the list
asking
price.
Yeah, I always help our seller to understand. I said, don't. I know it's a personal, but please don't take personal.
Yeah.
At the end of the day, we have a choice to say yes or no or renegotiate. Right. If we have a better offer, so you don't have to be upset. If I have a better offer, you take the better offer. Mm-hmm. But if there's no better offer, maybe that's what the market talking to us and telling us that's the right number for this house at this moment. But once again, Ken, when you talk the trend can be yearly trend, it can be monthly.
And you've had this situation even with the luxury home where it was listed, let's say, I won't say where the location, but you had a home, maybe it was listed at 1.3, the offer was at 1.5, but the seller's expectation was exceeded even the offer.
1.7.
So that was so that was the vibes that a lot of sellers were giving off for that they think that it's the expectation. So you have to reprogram the sellers to understand the market is changing and what the realistic expectations are.
A lot of time as an agent, we advise, but whether our client listen or not, it's really, I think in the case you just mentioned, obviously I'm not going to mention the particular file. I think sometimes it's the grade as well. So because if you put on the market the first day, you got 100,000 over asking, so maybe at least too low. Maybe ask another. I want another 200,000 more. So which is now looking back, a lot of people may laugh, but certain seller feel that way. They feel that way. So
they feel if I got an offer so quickly, maybe it's better. Maybe I should. Or even we've had situations. It's all real estate. The psychology with real estate is fantastic. You've had situations where you've gotten an offer that met or exceeded the seller's expectations, but then they still thought, well, maybe we should do another open house. Maybe we should keep it on the market a little bit longer because there might be if this offer is so good, that means the home is so fantastic. We might get more. But then it's a juggling act because if you do that, then you lose that one offer. They're going to become disinterested, and then you could risk losing them and not throwing out the baby with the bathwater. So
and it's really, as I said earlier, we advise our client. At the end of the day, it's really their choice.
Up to them.
Some listen, some don't. I have 2 examples for 2025. One, put on the market. Majority of people give one number, 675 per se, and the one give over 710, right? And the home inspection have some issues. I said to the seller, we should just negotiate with them and take it because if they want 25,000, you still end up with 685.
It's a business decision, yeah.
So 685. The other one we got only 675. The most used to get more. But the seller didn't feel that way and then killed the deal. Now the house went down so much, still couldn't find a buyer. And the other one I had, the same thing, the home inspection, but I wrote the seller 2-3 big essays to try to tell if we go back to the market. We remember everybody at the 670, that's the same amount. That was funny, the different house, but same amount, 670, but 2 fighting got 710. I said that's negotiate. But luckily that owner listened to me. So we closed because I told them I'm not confident we'll put back. We would get what we have. When you get a new one, they still may negotiate a home inspection.
Sure.
So why
sometimes
not?
You have to evaluate if it's better to take what's in your hand or to
it's a business decision.
Yeah,
it's not real estate decision.
Yeah.
Yes.
Yeah. Well, guess what? The first show is almost in the books. We're out of time. Again, we want to wish our listeners a very happy and healthy 2026. And we look forward to seeing you next week. Have a great weekend.
Have a good one. Thank you.